What's going on, guys? Welcome back to the channel. It's Friday, so that means we're going to be talking about whatever stock I spent this week looking into. As you guys know, these videos take a really long time to make. I have to read the 10K, the 10Q, I have to listen to the conference call, I have to look at the investor presentations, I have to look into the CEO. These videos do not take any short amount of time to make. So if you guys don't mind hitting that thumbs up button, that really helps me out in a massive, massive way, and I appreciate every single one of you that do that for me. Also, don't forget to subscribe to the channel if you want to see more videos about personal finance, stock market news, stock analysis, and everything else in between. And the stock we're going to be talking about today is Switch stock, ticker symbol SWCH. This stock is around $16 at the time of me filming this, and basically Switch is a company that's made up of co-location data centers. Switch is a technology infrastructure company specializing in developing the world's largest and most advanced hyperscale retail co-location data centers. We believe the future of the connected world depends on the sustainable and cost-effective growth of the internet and services it enables. Leveraging our technology platform and customer relationships, we provide solutions to help enable the growth, including the world's only hyperscale telecom auditing cooperative. We believe we are a pioneer in the design, construction, and operation of some of the world's most reliable, secure, resilient, and sustainable data centers. This company has a recurring revenue business model, which you guys, I know I really prefer the recurring revenue business model. It's one of the business models I think is the best personally, mainly because it's easier for the company to plan out for the next year and even the coming years, because they're gonna have a general idea, or a better idea rather, of what they're gonna do in revenue. And you know what, guys, after really looking into this company, I feel like it has a real Apple feel to it. Not so much as the potential was, but just the branding, just the customer service. It really has a great Apple feel to it. This isn't gonna show up on the balance sheet or in the business model or really anything. You really just have to read between the lines and just decipher this for yourself is what I'm trying to say here. It really just feels and seems like a credible business where at the end of the day, people are just gonna wanna put their money both into this stock and into this business. So back to the Apple comparison. Apple has done things that people might not have been a huge fan of at first. That's clear, that's obvious, such as getting rid of the old iPhone jack, or maybe getting rid of the home button on iPhones. Apple has done a ton of things that the public really didn't like too much at first. But Apple made it through, and why is that? That's because of their brand. Apple has absolutely fantastic customer service. That's not debatable. I think almost every person would agree that Apple has great, great customer service. Think about it. When you go into Apple, well, on the fly during normal times, we'll see. It might be only appointment only now, but when you go into Apple on the fly, they have someone standing there right at the front door circling the wagons just to help you, just to make sure you're getting the help you need. You can also text Apple support if you don't want to go to the store, or maybe you can't get to the store. Or you can even just call Apple support if you'd rather do that, and you can be on the phone with someone in minutes, if not seconds. I actually know someone that used to work for Apple, and he constantly raves about the company. He can't say enough good things about it. He actually just says they always put the employees first, and he's just a really big fan of the company in general. Now, like I just said, do I think this company has the potential to be as big as Apple and the market cap as Apple? No, absolutely not. I do not see it getting that big by any means. Could I be wrong? I mean, hopefully. I've added it to one of my positions, so I would love to be wrong and have it be as big as Apple, but I do not think it can be as big as Apple. But like I'm saying, just the credible, the branding, just the customer service aspect, it has a really Apple feel to it, I feel in my personal opinion. And they have a very low churn rate. They have a 0.6% churn rate, which actually really emphasizes my point, because people come and they really don't leave. They really like this business, they like this company, the customers that is, and they just don't leave and they stick around. The company has 4 main primary locations right now. They have the core campus in Vegas, which is about 2.3 million square feet and about 315 megawatts power capacity. The Citadel campus near Reno, which is projected to be the world's largest data center once it's done. It's over 1 million square feet and up to 130 megawatt power capacity right now. And this has the potential to expand to 5 million square feet with a 520 megawatt capacity. That would be massive for this company, guys. That would be absolutely huge if they could expand that far. They have the Pyramid campus in Michigan, which is over 1.1 million square feet and over 110 megawatt power capacity. And lastly, they have the up-and-coming Keep campus in Atlanta, which is 310 square feet and 35 megawatt power capacity. So stop right there, right? After looking at those 4 properties, this company is around a $4 billion market cap right now. How much do you think these 4 properties are worth right now? How much do you think they're worth? 4 billion? 5 billion, 6 billion? I can guarantee you, if someone comes in there and really does not know how to evaluate properties, those properties themselves, just the properties themselves, not even the business, they're worth over 4 billion. I think that's a pretty safe assumption. So just by looking at that, you can make an argument that the company is undervalued. But the business is also attacking states that have low and no income tax. Nevada, no income tax. Michigan in the lower income tax bracket. Atlanta in the bottom half of income taxes. I love to see that, and I love how they're attacking these states with lower or no income tax, because it's just really going to lead to having more money in the business, and they're going to have more money to continue to build and innovate. As for their customer base, they do have over 950 customers, and it's actually a pretty diversified customer base, believe it or not. They have customers in the cloud and IT space. That's clearly not going anywhere by any means. If anything, that's on the come up. That makes up about 25% of their revenue. Healthcare makes up about 7.4%. Network and telecom at 8%. Other 4.3%. Government and utilities makes up 2.8% of their revenue. Transportation and logistics also make up 2.7%. E-commerce makes up 15.2%. That's definitely not going anywhere. That's on the come up. Retail and consumer goods makes up 2.3%. Digital content and multimedia entertainment at 16.1%. Hospitality and gaming make up 3.8%. And finance and banking make up 12.2%. So this is a very diversified revenue business model we're looking at right here. And a lot of these sectors, they're not going anywhere anytime soon by any means. They work with a bunch of different industries, and these industries, like I just said, are going to be around for quite a while. Healthcare is always going to be around. They're always going to need data centers, right? Cloud spaces are going to need data centers. That's on the come up. Cloud's not going anywhere. Financial firms are definitely going to need data centers. Financial firms aren't going anywhere. And I think Switch has some really big potential to be a big player in this field. But guys, the thing is, with every investment comes risk, okay? Anything you do with your money, whether you put in a stock, an index fund, cash, real estate, there's always going to be some sort of risk. It's just a fact. There's always going to be some sort of risk. And like with Switch, there is a risk. So my thought process is, what happens if these data centers gets breached? Because that's happened. There's hackers out there. There's more advanced hackers, and obviously there's more on the come up. There's more getting more and more skills, I guess you could say, which really sucks for everyone, because that's just not something that I feel like should be around. But there's really nothing you can do to prevent it right now. So what if Switch's data centers get breached? That's what I'm thinking. So say they get breached, what's the fallout of that? What happens after that? And so say the customers just aren't as happy, so Switch can't deliver on what they promised in those contracts, and those customers are like, well, how do we know that's not going to happen again? Like, we have this valuable data. Healthcare centers have very valuable data. Obviously, financial firms have very valuable data. Clouds on the come up, they have valuable data. All of these sectors and industries have very valuable data that they really don't want to get out to other people. So what happens if these contracts become worth less, because the company's like, well, we're going to leave, we're going to go here because we don't want to be here, because we don't want this breach to happen again. And Switch is like, oh, please don't do that, like, we'll work with you. So say the company that Switch is working with, they decide to negotiate that contract down, because these contracts are negotiable. It says it right in the 10K. These contracts that companies sign with Switch are definitely negotiable. So say they negotiate that contract down, right? And then the other companies that maybe weren't on it and weren't negotiating, they say, well, they got it for, because this is public knowledge. They're like, well, they got it for a lower deal. Why can't I, right? So what's that going to do to Switch's revenue? Obviously, that's going to bring it down. It's going to bring it down, because they're just going to have contracts that are worth less. It's like a fact. It's basic math. Or what also could happen is, say like a really bad breach happens, and the customer is like, you know what, I just don't want to be part of this company anymore. I don't want to work with it. We're going to go our own route. And they actually start their own data center. They start their own data center, which provides competition to Switch. And then say some of these companies that work with Switch, they decide, well, we don't like what happened here either, and you're giving us a better price, and we like your model a little bit better. We're going to go with you. We're going to go with the company that started on their own. And guys, that's just a risk that I came up with. There's other risks, but that's a big one that came to my mind. But ultimately, after doing out everything that I've researched and looking into everything, I do feel like the risk is worth the reward in this situation. I will say this isn't a position I'm going to make into a huge position. It's not like a Dropbox or Beyond Meat or anything like that, which I feel very confident in. I do feel confident in it, but it's like we talked about in my last video, or one of my last videos about building out a stock portfolio. I feel like this one I'd like to make around 10% or so. So it's like I'm bullish, but I'm not like easy money stock, you know what I'm saying? But in saying that, I don't know how much more of this stock I'm going to buy for the rest of 2020, because it's only a month left. But this is a stock I'm going to continue to buy in 2021. And I really think this could start moving sometime in 2021 or even 2022. Let's look at how the revenue has been growing year over year. 265 million in 2015, 318 million in 2016, 378 million in 2017, $405 million in 2018, and $462 million in 2019. And for the TTM in 2020, they've already done $462 million. So I think it's safe to say they're going to do over $500 million in revenue this year, guys. I think that's pretty safe to say. And that's despite the virus concerns and the virus going on. So I think things are just going to continue to go up from here. The company also pays a dividend. It's paid a dividend since 2017. They paid 1 cent in 2017, 6 cents in 2018, and 12 cents in 2019. So they're consistently raising and paying a dividend by a pretty solid margin, but it's not too much of a dividend to the point where it's going to affect their business. Let's take a look at the balance sheet. So they had $156 million in cash and cash equivalents, up from $24 million in Q3 last year. That's a pretty big increase. They have $180 million in total current assets compared to $59 million in the Q3 of 2019. They have total assets at a big number of $2 billion. And as to their liabilities, they do have $115 million in total current liabilities, $1.4 billion in total liabilities. They have current debt of $6 million, okay? Current debt, that means short-term debt that they have to pay off. And then they have net debt of $985 million. So they do have a lot of debt, guys, they do. So here's the thing, guys. If a company really has to put up these buildings or data centers or properties, like Wynn Resorts, another example, they have a good amount of debt because they had to put up all these properties that cost money. That's the bottom line. So I'm okay with a balance sheet that has a little bit more debt if they have to put up properties like this. As for the revenue this past quarter, they were up $6 million year over year despite the virus, and gross profit was actually down year over year by $4 million. Net income's up to $13 million, which actually that's up $3 million from the previous year, so that's really encouraging to see the bottom line growing. And their adjusted EBITDA is up to $67 million, which says $60 million last year of Q3. And these are some important things, guys. Like honestly, they're just things you want to see. During a once in a 100-year event, the company's growing top line, bottom line, adjusted EBITDA. They're still finding ways to innovate and grow during this once in a 100-year events. As Randy Moss would say, one clap. Now let's look at the CEO, and I find him very interesting. His name is Rob Roy. He's actually the founder of this company, and this is a founder-led company. But to be honest, I think he's a little odd if you ask me, but a good odd. I did find a couple of things I really liked about him. So he purchased the former Enron facility in Nevada in an auction. And actually, it was only attended by Roy because fiber plans were so secretive that few people knew about the auction. First off, what does that tell you? It tells you, one, he has a good eye, right? Second off, what is Bill Belichick so famous for? He's famous for finding guys that are like casted off, maybe they just were undrafted, they're not important, they're irrelevant, and he plugs them in and become Pro Bowlers. So I see a little bit of that here with Rob Roy, okay? So he finds the property that not too many people know about, that's very secretive. He goes there and he buys it. I really like to see that. Now, he's also very hard to get in touch with because I actually read an article about him, and the article said that one woman was trying to email him, and it took weeks of emailing switch for the woman to get in touch with him. And I'm just like, what? And he wasn't even on the conference call either. I couldn't even believe it. I actually went and looked up the transcript after I listened to the conference call because I just didn't believe he wasn't on the conference call. So what does that mean and why is this relevant? So basically what he likes to do from what I'm gathering is he likes to move in silence, which I really like to see in a CEO. And I'm actually really excited. That makes me very excited to see that he's moving in silence. But why is that important? So if he's moving in silence, that to me triggers that he's introverted, right? And introverted, that can be very good or very bad for some people. I think in this situation, it's a very good. Now, if you're introverted, don't take that the wrong way. There's absolutely nothing wrong with being introverted. This is strictly from a business perspective. So why is being introverted from a business perspective potentially good? So being introverted, he really doesn't go and talk to a lot of people. He probably keeps to himself a lot. So he has all these thoughts going through his head. And based on what I've read about what he's done for the company, he's putting those thoughts towards the business. So I can see him as someone who just sits there, sits in his living room, sits in his room and just thinks about the business. He turns off his phone, turns off the computer. He just thinks about the business and how we can innovate and how we can make it better. And I think that's going to be huge and could provide some exponential growth for this business. So in other words, we could see some sort of, maybe not now, but like next year, we could see some sort of like earth-shattering news from Switch like overnight that can completely change the stock. I really think that could absolutely happen. Let's look at what analysts say about this company. They're projected to grow 11% in revenues this year, just under 11% next year. And guys, don't be surprised if those numbers come in higher than that, okay? Don't be surprised. Switch is projected to grow 600% next quarter, 45% for the next year, 50% next year, and 35% for the next 5 years. So guys, before we sign off here, let me leave you with these final thoughts, okay? So this company has massive site expansion. They have data centers that are going up, right? There's gonna be more and more going up for the next few years. They have customers in industries that are not going anywhere. Healthcare's not going anywhere. Cloud's not going anywhere. Finances aren't going anywhere. None of those industries are going anywhere that they have customers in. They have a recurring revenue model, so they can project what the revenue is going to be over the next 2 years. The company's founder-led. I didn't mention that, but the company is founder-led. Rob Roy did find this company. And on top of that, they're growing. I'll go over here so I'm not standing in your way. They're growing top and bottom line during a once-in-a-100-year event. Hope you guys enjoyed this video. Thank you so much for watching. If you don't mind, smash that thumbs up button. That really helps out the channel in a massive, massive way. Don't forget to subscribe to the channel as well if you want to see more videos like this. Let me know down in the comments what you think of Switch, if you're buying it, what price you got it at, all those different things about Switch. Again, guys, thank you so much for watching. Hope you guys have a great weekend, and I'll see you guys in the next video.